Guys, when the market is screaming that it is at the top, guys, it is time to buy some damn puts. I know what you're thinking, but Leonardo, the market just keeps going higher and higher. Guys, I'm telling you, we predicted the market drop in September before the crazy drop happened in October. We predicted a further drop based on the 13 market moves formula in November and December. Guys, I'm telling you, the history keeps repeating itself, and right now is the time to buy the damn puts. So do not be buying this dip. This is the main message. And in the next few minutes, I'm going to show you exactly why. Now, we're heading into the market close today on April 9th, 2019. We got 1 minute and 20 seconds to go. I'm going to show you how these charts look live real quick, and then we're actually going to examine them just a little bit closer to give you exactly the signs of the top. Guys, this doesn't happen very often when the market creates an all-time triple top. Damn, this is the time to get excited. Guys, some awesome trading opportunities are here. Look, the market is making a market move 3 in our markets move formula. Guys, this is exciting because after a sequence of these bullish moves, okay, when it finally breaks low like that, it tells you that there is going to be a continuation of the move, especially when it coincides with some of the key stocks like Amazon. What do you hear about Amazon? There's one guy that raised the price target on Amazon yesterday. He said $2,370. I mean, when people start raising these target prices after the stocks have rallied 20-30% since their recent lows, it is time to get concerned. What did you hear about Apple? Well, I know if you're not a subscriber to our 13 Market Moves Daily, guys, you probably missed this one, but we were recommended to short Apple this morning. I'll show you how the chart of Apple looks in just a few seconds. VIX finally above 14. Guys, here's the ringing bell. And now, let's dive in and take a closer look. Okay, fine. Why the hell should we be buying puts? Guys, the highly controversial question and answer for the day. If the economy is so freaking good, why does Trump insist on lowering interest rates and implementing further quantitative easing? The answer is simple, because he knows the economy is on the verge of a collapse. Now, I got a warning, guys, seriously, if you are a hardcore bull, you need to stop this video now. Do not watch any further, because you won't be able to sleep if you watch this video till the end. You have been warned. Now, let me ask you a simple question. Do you think this chart right here is pointing to a move higher or to a move lower? Let's even forget about it for a second. What is this chart? Let's just focus on the chart itself. Do you guys think this chart is pointing to a breakout higher, or do you guys think this chart is about to point to a move lower? Guys, 1, 2, 3. I'll give you even a further hint. Guys, check this out. How about now? Does this look like this chart is pointing to a move higher or a move lower? Now, for some of you guys that, just getting into trading stocks and, just learning charts, this may be a complex question. But for some of you that has taken our charts and divergence course, guys, this is a no-brainer. Look at this in both charts, the daily chart and the weekly charts. It's best to analyze multiple time frame charts. Okay, we got a divergence here developing between the RSI and the price action of the Japanese stock exchange. Now, why on earth would we be looking at Japanese stock exchange, guys? Because specifically in the course of the last 30 to 60 days, we have had an incredible correlation like we have not had in a long time, that is developing between Nikkei and S&P futures. Okay, so oftentimes whatever Nikkei does overseas is what United States S&P futures have been following here in the United States. So if we get the answer to where the Japanese stock market is going next, we'll ultimately have the answer to the question where the markets are heading here as far as the S&P futures and NASDAQ and so on. So what do we have on this daily chart? Guys, look at this. 1 dot, 2 dot, 3 dots. Look, is the second dot lower than the first dot? The answer is yes. Is the third dot lower than the second dot? The answer is yes. Look, guys, I'm trying to break this down to pure simplicity here. Is the second dot here higher than the first dot? Yes. Is the third dot here higher than the second dot? Yes. Well, it's not supposed to be doing this. If these dots continue higher, so these dots should continue high as well. Exact opposite is happening. I want you guys to take a mental picture as we go through this video, because you will see the importance of this. Now, generally speaking, okay, these divergency between the RSI or the strength of something in relation to the price action of something. When something goes higher, this strength is supposed to go higher. If the strength continues lower while the price action goes higher, it tells you that the reversal is coming. So again, you want to see these dots and these dots moving in the same direction. When these dots are not doing that, that is a warning to take action, while other people are still being bulls because they're comfortable of being bulls. Guys, nobody paid attention to us when we became bulls right here when the markets was dropping on December 24th. Yes, we posted a video on this channel, but guess what? It was uncomfortable to be a bull here. Now it is comfortable to be a bull. Just as everybody becomes comfortable being a bull, this is exactly the opposite of what you should be doing. So in this video, I'm inviting you to put on your best bear outfit. Better yet, guys, if you've never worn a bear outfit, you need to go and buy one today. As a matter of fact, hey, I'm recording this video at 5:12 p.m. right now on April 9th after the market closed. And I'm telling you guys, hey, the shopping malls are still open. Go get you a bear outfit ASAP, because you will need it over the course of the next 30 days. So here's the deal. Nikkei on weekly chart is the same deal, guys. Look, it's a little bit more pronounced here, right? RSI, here's the first dot, the second, the third. Okay, it's very simple, guys. It's a downtrend. Well, we got these stops right here on Nikkei, right? First stop, second top, third top. Now, some of you may go, well, it's not a top. It just hasn't gotten it. Guys, some of these stops don't have to be 100% precise. This stop coincides with this level of the blue line. There's a high probability there's going to be a pullback. Now, I know, just bear with me. I'm going to give you some more examples here. So let's take a look at this. What the hell is this? You may be thinking, what? Guys, welcome back home here in the United States. We're trading S&P futures right here. Here's a chart of SPX on daily time frame. Coincidence or not? What is going on here, guys? First dot, second dot, third dot. Guys, I feel like I'm a first grade right now, but man, this is such a simple, basic concept. I mean, even if you're a brand new trader, you guys should grasp this and make some home runs with it in the upcoming few days. First dot, second dot, third dot. Guys, price action going higher while the strength is moving lower. That does not lead to a breakout higher. Okay? If you're not convinced, let me show you the big picture. Guys, for those of you that can draw a line, can you draw a line? Because clearly, I mean, look at me drawing a freaking line. I can't draw a line for anything. I mean, as a matter of fact, I could barely pass my drawing class. I mean, I think I was in the third grade. I was this really pretty girl, you know, sitting right next to me. She used to do all the drawings for me, guys. I mean, clearly you can see that. And thanks to her, I think her name was Christina. Man, turned out to be a beautiful girl later, you know. I mean, yeah, she was pretty hot, guys. Anyways, you know, she used to do all my drawings, not just in the third grade, but, you know, throughout the years. And in any case, here, let's focus on the drawing here, guys. Okay, the dots. Okay, so these dots, if you draw a line, they go lower. These dots, they go higher. Okay, and that leads to a pullback in the markets. In some instances, it leads to a crash. In some instances, it leads to severe pullbacks. In some instances, it leads to just a temporary pullback. So we have this situation developing. So if you can draw a line, I want you guys to draw a line because this makes it highly visible. For those of you that cannot draw a line, it's okay because clearly I can't draw one either. So here it is. can you look and focus at the 3 dots? Man, I should have made those dots bigger. Damn it, they look kind of small now. Okay, so dot 1, dot 2, dot 3. Dot 1, dot 2, dot 3. Guys, what do you see? Can you look at these 3 blue dots and please tell me, what do you see? Guys, if you're new, your excuse, that's fine. But if you've been doing this for a while, I mean, there is no excuses for you guys, straight up. Okay, so 1, 2, 3. Guys, it's a triple top. Hello. Welcome back. Trading 101. Guys, this is a triple top. Now, this is not trading 101 when you combine it with a severe divergency, right? This is pretty serious stuff because it tells us that longer term wise, this market will collapse. It does not mean it will collapse tomorrow, but these divergences should not be taken lightly. Okay? This is serious stuff, guys, so pay some damn attention here because it's going to come handy if you want to make some money this year in the stock market. Divergency, triple top, 3 blue dots. Guys, if you don't understand this, okay, you need to take the charts and divergency scores because it's going to bring some light. You're going to be able to put some very powerful trades in the coming year. So make sure you click the links below if you don't understand what divergency are, how to read them. They are important because they point out specifically to what is developing next in the markets. Not what happened today, not what they talk about in the news today, but what is actually coming. And that is crucial because if you want to be a successful stock trader, if you want to be a successful options trader, you need to get an answer to a very simple question. What is next? All they talk about in the news is what happened today. That don't help you put any good trades together. You need to know what's tomorrow, what's going to be happening next week, what's going to be happening next 30, 60 days, next 6 months. If you can get an answer to that, you will be a successful trader. Now, the answer is in the divergences. And today, the purpose of this video is to illustrate one major divergency that is developing across multiple charts. So let's take a look at the next example. I mean, for those of you that are hardcore bulls, I mean, you should be pretty happy right now because the chart of NASDAQ looks pretty bullish. Look at this. Happy bulls. Happy bull 1, happy bull 2, happy bull 3. Bulls win. Guys, just kidding. This is not a bullish chart. I mean, it may appear to you in Trading 101 that this is a bullish chart. However, okay, we're running some major resistance levels. We'll look at the longer time frame chart. Guys, this is time to run. This is time to exit and clearly by observing some of the 1 day, 1 minute charts over the last few days, some of the information I've been sharing with our 13 Markets Move Formula subscribers, okay, for the daily sequence. Okay, we've been observing some people coming in, taking some profits right here, right now in the last few days. And we're not talking about individual investors. We're talking about huge institutional investors. We see this type of behavior that typically leads to a drop. Now, some of these stops, they don't happen instantaneously. They don't happen overnight. They take some time to develop. But once that major move lower comes, I want you guys to be ready. It's as simple as that. So as bullish as this chart may look, remember, all the charts look extremely bullish in August and September. What did we say? You guys can go look at the videos we posted in August, September on this channel. We said the market was about to drop. Now the chart looked unanimously bullish. Okay, but how do we know the drop was coming? It's in the divergences. Guys, it's in the divergence. So bulls win? Hell no. Not this time. Okay, we've been bulls since here, but this is not the time to be a bull. That's all I'm trying to say, guys. So can you see the big picture? This is a longer time frame weekly chart of NASDAQ. Guys, I'm not kidding you, okay? This is the chart of NASDAQ. This is not the chart of S&P 500. I was just showing you. It just coincidental or not that it looks almost identical, just like the S&P chart. And what do we see? Top 1, top 2, top 3. What do we see on the strength index? 1, 2, 3. confirmed downtrend. Can you draw, for those of you guys that are better than me and can draw a line, please draw a line right here, and you'll see that this line is going lower, and it should be going higher if we're to go to all-time highs. Okay, so bottom line is, the question is, can you see the big picture? And the answer is probably not. If you're a hardcore bull, after I've showed you just a handful of examples here, the answer is probably not. You can't see the big picture. So ultimately, it's probably because you've been brainwashed by the news. So let me give you some more examples here, guys. Okay, for those of you that are offended by some of my comments, just go ahead and unsubscribe right now. You know, guys, seriously. I mean, if you're not trying to learn and take some information with you that you can apply tomorrow, it's just a waste of time. If you're just going to be a bull and, you know, you have a one set of mind, one direction mind, it's not very helpful when you're being a trader. You got to be able to reverse your thinking in either side of the direction. All I want you to do is have an open mind. Bottom line. And I want you to consider the situation in the markets right now to that situation in Bitcoin in December 2017, when everybody thought it was going to $1 million. Just as everybody equally thinks the market is going to continue moving higher. Look, guys, it's that simple. It's easy to be a bull when the markets are moving higher. Nobody wants to be a bear. But that's where the money is made. You have to be a contrarian when the charts are pointing to the fact that you should be a contrarian. So let me give you some more examples. Here's the chart of DAX. DAX is the German stock market. Okay, so as German stock index moves higher price-wise, the RSI is not moving higher, which is another divergence, just the same as the ones that we have seen in other indexes. Now, things sure look bullish in Hong Kong too, guys. Let me tell you. I mean, look at this thing. It just keeps moving higher and higher and higher. We even got a bullish reversal cross going on right here. You know, here you got dot 1, dot 2, dot 3. Whoa. But what does the strength index tell us? That this move higher is not sustainable, which is not surprising. We went from 24K all the way to 30K in a matter of, you know, just a few months. Guys, moves like that are typically not sustainable. So it does not mean we cannot go just slightly higher before a big reversal. But what we're looking at across the board is, this is the time. Guys, this is the time to sell your calls. And this is the time to buy some puts, because the divergences are pretty solid across the board. Guys, I can pull up any chart on any stock right now, and you're going to see a similar development. So, guys, charts don't lie, especially when we're observing the same behavior across the board. Now, what is this? This is Apple. Oh, dude, no. No, man. Come on, man. You're going to bring Apple into this too now? I mean, seriously. Oh, dude, it is on now. Guys, the fight is on. All the Apple bulls, Apple to the moon, right? I mean, everybody. I mean, nobody wanted to hear us when we said right here, when Apple was at the 140s, 145s, we said buy Apple calls. Well, nobody wanted to listen, right? I mean, the few guys that listened, I mean, they made money, and they probably would make a lot more if they stayed in their positions a little bit longer. But hey, you can go back to the channel. We said this move higher was going to take place in Apple right here. Now, everybody was still bearish. So guess what? It's easy to be a bear when things drop. It's easy to be a bull when things move higher. But what we're observing today in Apple, surprise, surprise. Divergence, guys, check this out. Here's the RSI right here. When Apple was at this price, the price moves higher, the strength moves lower. It is the same divergence that we're observing across the board. Now, to make things even sweeter, not for the bulls, but for the bears, first day of a bearish reversal candle. Guys, this is significant. When something's got such a powerful uptrend for quite some time, okay, this is the first day of the bearish reversal candle that tells us maybe we're going to have a few consecutive days lower, just like this one right here. And notice, as Apple moves from this 188, 189 level all the way to a high today of about 203, look what happens. Does the volume follow? No. The highest volume you see right here was on the sell side when it was dropping in this range right here. So it's reasonable to expect it's going to make a pullback to this 189 level. And that's exactly, if you were a subscriber, you would have gotten the video earlier this morning before the markets opened saying that, hey, at this level right here, at about 200, it may make sense Well, everybody is bullish like crazy. They just can't see straight. Just buy Apple, okay? Where were these guys right here when we said buy Apple right here? Guys, remember, the rules, they never change. Buy low, sell high. Nothing ever changes in the stock market. So when things get high like this, where they're hitting some crazy resistance levels, this is not the time to be a bull. Come on, let's get real here for a second. Okay, so, whoa. Hell no, buddy. Come on. Now you're going to bring Amazon into this. How do you dare? How do you dare? Now, I've warned you bulls to pause the video earlier. Now, if you're here, now you need to listen to this. Okay, check this out. Not only do we have our side divergence in Amazon, we have a strong volume divergence as well. So volume, when something goes higher, volume typically is supposed to go higher, but volume's just been dropping off consistently. So some may argue, oh, this is a couple to handle. This thing is about to break higher. Guys, it is not a coincidence that Amazon makes a bearish reversal candle on the same day that Apple is making a bearish reversal candle. And for those of you guys that have no clue what is a bearish reversal candle, click the link below, get the charts, divergences, and pattern recognition course so you would understand this better, so you can become a more powerful trader. So do you see the big picture? Price action higher, RSI lower. That does not lead to a move higher. That typically leads to a move lower. Okay, NVIDIA from 130 to 190. Guys, I mean, if you're a part of our alert service, you remember how many alerts we send out when NVIDIA was at the 130, 140. Buy calls, buy calls. Now, at the time, most everybody was scared to buy calls because it was freaking scary, because it was dropping like a rock here, and then was dropping like a rock. And so, was it comfortable being a bull? No, but it sure feels comfortable being a bull now, right? When the stock is at the 190 level, guys, if you take a look at a miniature time frame like a 2-minute today, you will see there's a head and shoulder pattern right here on this chart. So yes, miniature head and shoulder and smaller time frame right here telling us it's time to get the hell out of this stock, because a big move lower is coming, maybe back to 170s. 170s would be a good level to possibly buy the dip. Now, triple top in cloud stocks. Whoa. Well, look at this, guys. Look, I'm not making this stuff up. It's right there in the charts. You can go pull it up. Stockcharts.com, you can go pull it up on whatever software you're using trading. Guys, this is not a joke. This is serious stuff. Top 1, top 2, top 3. Now, you may say, okay, who cares? Well, I wouldn't care as much about this particular chart, but I do because it's institutional investors' favorite. And clearly, when we trade options, we want to follow exactly what institutional investors are doing. So if they're taking money out of the best cloud stock, I want to be buying puts. I don't want to be buying calls. Okay? Now, here's the main thing, and the reason why we're bringing up this example is cloud stocks have been institutional investors' favorites for the last few years because, guys, they've been considered like a, bulletproof stuff, even if the economy goes bad, because, large businesses, they want to save money. They want to invest money in cost-cutting procedures that would save them money and operational costs. And that's what cloud stocks do for a variety of businesses. But what we're clearly seeing, after moving from the 120s all the way to this 165 level, 1, 2, 3, it's a triple top, guys. I mean, if you were a blind man, you should be able to see this right here. Triple top right here. Okay, you can't mistake this for anything else. And a sure characteristic of a triple top would be the acceleration and the sell volume. So if you take this lower days when the stock is actually selling off, it's selling off an extremely higher volume in relation to the volume on which the stock is bought. So that tells you more people are getting out of here compared to the people that are trying to buy these stocks. So, have you ever showed up a little too late to the party? Guys, this party is over in the cloud stocks, at least for now. So if it's like, Saturday night, 5 a.m., this is it right here, 5 a.m. Saturday night. grab your girl and go home. Okay, this is time to go home. Lights out. This thing is about to drop. Okay, so triple top in the head and shoulders in Splunk. Now, Splunk is another cloud play. Guys, not only we have the same triple top as we just witnessed in the case of CRM, here's your top 1, top 2, top 3, but we also got this case of head and shoulders, which makes this, even more of a powerful play. So Splunk is heading lower. Bottom line, it's at 129 now, guys. I wouldn't be surprised over the course next 2 weeks, see it at 112. Okay, and another cloud stock about to come to earth and bite the dust. Now this one, guys, this one here, let me tell you, this one here is definitely institutional investors' favorite. Workday, WDAY, top 1, top 2, top 3. Guys, I'm not even drawing these dots over here anymore. For those that are much better than me, you can draw the line right here in the relative strength index, and you would know this damn thing is about to crash. How low can it go? Hey, 170 sounds reasonable. Maybe it'll finally close the gap right here. So we expect some reasonable pullbacks in this thing. Notice the same characteristics, okay? When we have these big red candles, notice what happens to the volume. The volume spikes higher. So therefore, I got these 2 little dots right here for you guys, so you wouldn't miss this very important observation. When this top stock in the cloud sector drops, oh yeah, they're coming in and they're taking profits, and that is likely to continue and actually intensify over the course of the next 30-60 days. So a move lower is highly expected in this. Now, why are we talking about cloud stocks? Again, because they are institutional investors' favorite among the technology sector. If we notice that the best stocks in the technology sector are selling off, that will lead to a sell-off in other technology stocks. And if we're seeing technology stocks are selling off at these levels, which coincides with the triple top in the other indexes, not just here, but worldwide, that tells us that we're not moving higher to all-time highs. That tells us that we're actually about to move lower. Now, I know, guys, you're skeptical. You're thinking, dude, you don't make sense. You don't know what you're talking about. Leonardo, okay, so you made a few good calls. You predicted the crash in October and November and December, and, you predicted the bull run, since December 24th and all that good stuff, and that's it? I mean, that's all you got. I mean, a few clouds coming to earth, markets worldwide sitting at the triple top like a Humpty Dumpty in a wall, a few bearish candles, in top stocks. I mean, come on, is this it? I mean, come on, man. Seriously, you want us to go ahead and just short the market just because of this? I mean, I'm a bull. I ain't changing. Man, I'm buying calls. I don't care what you say, Leonardo. Tomorrow when the market opens, guess what I'm going to do? Okay, number one, I'm going to tell you what I'm going to do right now. I'm going to dislike your video right now. That's one thing I'm going to do. And then tomorrow when the market opens, I'm going to buy calls. Yeah, and I'm going to leave you a few nasty comments. Guys, please, you're so welcome to do that. Okay, after all, I appreciate every one of you watching my crazy videos. So thank you so much. Leave a nasty comment anytime you'd like. Okay, financials are selling off into earnings. Guys, BLK, BlackRock. Do you guys see the big picture? Top 1, top 2, top 3. Downtrend in the RSI. Price action higher, RSI lower. Guys, that typically does not lead to a breakout higher, but it does lead to a move lower. Now, some of you say, man, why you gotta get all offensive? I mean, what the hell is BlackRock? Okay, all right, fine. I understand. Maybe some new people watching this, and so maybe you're not familiar with BLK. Well, guys, how about Bank of America? Anyone? I mean, anyone has listened to our winning watch list, correlations, Free training telling you not to short Bank of America. Actually, not to short, but not to trade Bank of America. Actually, right now is actually a good time to short Bank of America. But damn it, there's better stocks out there, guys. If you're wondering what are some better stocks for options, because trust me, not all stocks are good for trading options. If you're trying to find out the best stocks, click the link below. There should be a link somewhere out there, guys. I don't know what these links are. Just find the link somewhere down there. Click it. You should be able to get our win and watch list so you can have better results as far as trading options. Now, all stocks are pretty much the same when it comes to trading stocks, but not all stocks are equal when it comes to trading options. Anyways, Bank of America. Don't trade it, but I'm using it for an example because we have a quadra top here on BAC. Top 1, top 2, top 3, top 4. RSI, do you guys see the big picture? RSI is downtrending while the price action. Guys, there's literally, like, I'm telling you, there's about a 5% chance that Bank of America is going to break out higher above 31 level. And there's about a 95% chance that this damn thing is going to drop back to the 26 level right here. So I typically go with a higher probability odds. Now, if you want to be a bull, be a bull. I mean, it's on you. But at least I'm going to sleep good tonight because I've shown you the stuff that I'm looking at. Okay. And guys, it's not everything. Now, the best of the best. Check this out. JP Morgan actually has the worst chart of the worst charts. You got the double top right here. Warren Buffett says, I am in, I am buying this thing. He says it actually right around here. After that, the thing drops. Well, for those of you that don't know, Warren Buffett doesn't get everything right. Hell, surely I don't get everything right, but I do get quite a few trades right. And I'm pretty damn good at identifying these reversals, guys. So if you study some of the information that I share in my videos, I am beyond any doubt that such information will help you become a better trader. So top 1, top 2, top 3, or you can also consider it top 3, 4, and 5. Also got head and shoulders pattern going on there as well. So JP Morgan, guys, notice the same pattern is across the board in multiple sectors, which is why we should be taking this seriously. When this thing sells off right here, look at the spike in the volume, the red bars. This time, recently it sells off. Look at the spike in the volume. Guys, this is happening. Today is Tuesday, April 9th. These financials are about to report earnings on Friday, 3 days from now. Guys, if you don't know how to trade earnings, I encourage you to take our latest updated course that's called Trade Like a Rock Star. If you don't feel like you're a rock star in the markets, guys, you need to get the information that will allow you to trade like a rock star. So click the link below. It should say somewhere down there, Rockstar course. Take it. Take it in the next 72 hours. Guys, it's like 6, 7, I don't know, maybe even 8 hours of information where you will be taught how to read the correlations between the earnings, how to specifically trade the earnings season. And guys, earnings season typically kicks off with these 3 financial stocks reporting earnings. JP Morgan, okay, Bank of America, and BOK and Goldman Sachs. These stocks will be reporting earnings here in the next few days. And if you understand the information in that course, I guarantee you, it will give you the power to tap into some gains that you probably have not realized this year or last year. The information is that powerful. So if you're ready to go to the next level and you're trading, take the course now. Getting back to this chart, guys, what we're seeing across the board in all 3 of the examples of the financial stocks I have just given you is they are selling off going into the earnings. And typically when we see some sell-offs like this preceding a break higher on lower volume before the earnings announcement, that is generally leading us to a drop in the stock, not a rise in the stock. Okay, so here's the key takeaways, guys. You haven't figured that out yet. The market is going to hell. Simple as that. The market is going to hell. Just kidding. All I'm saying is the probability of strong pullback is very likely. So sleep good. Sleep good, guys. As long as you own some puts. Just playing. Hey, look, you got to have some fun trading these markets, guys. Some really cool trades are about to come up. And if you're trying to become a better trader, guys, I've traded for many years. I just want to invite anybody that wants to make this year their best trading year ever to get some more information, take some free trading that we offer. Hey, go to our website, tradingoptionslive.com. Look through plenty of free information. Look for plenty of free stuff. Guys, you know, the truth is this. I get a lot of comments. Well, your courses are too high. Okay, I get it. I agree. The courses are too freaking high if you just look at the cost. But you got to look at things sometimes from the standpoint of what is something worth. You take some information, helps you become a better trader, okay? Spend $3 grand on it, you end up making 25K in the next 30 days. Was that information expensive? I don't know. You be the judge, and clearly have different people with different outcomes. Now, please, if you're a negative person, don't take any of our stuff, because I can't help negative people, and this is the bottom line. If you're negative, if you're a skeptic, if you just question everything, and you don't think that good results are possible, you don't think anything in life that is good is possible, guys, the reality is you have to change your frame of mind if you want to be successful in anything. So with that said, you know, if you have a positive mind frame, take the courses, get the information, okay? I don't promise it's going to make you a millionaire overnight, but what I do promise, it will help you. So, guys, I wish you great success this year. I wish you have an awesome trading week. Thanks for watching the video, and I'll catch you in the next one. Make it an awesome day tomorrow.